Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate finance. And today we're re-looking at Carlyle Secured Lending Incorporated's latest report. Get ready because they're re-cooking up a big deal that could really change things. We're re-diving into a recent filing that reveals a massive new debt offering. Carlyle Secured Lending is looking to raise a whopping $300 million. Wonder what they'll do with all that cash. Before we jump in, if you love getting the real story behind the numbers without all the jargon, make sure to subscribe. And hey, we've got a growing community on Discord where we break down these filings even further, so check out the link in the description. Grab your coffee and let's get cracking. So, what is actually happening here? Carlyle Secured Lending Inc. has just announced they are issuing and selling notes, which is basically a fancy way of saying they are borrowing a huge amount of money. Specifically, they are borrowing $300 million US. These notes, which are like IOs for the company, are going to mature in 2031, and they come with an interest rate of 5.750%. This is a pretty significant move for the company. Think of it like taking out a massive loan to fund their future projects or operations. This filing is all about a new agreement, an underwriting agreement, that Carlyle Secured Lending, otherwise known as the company, has entered into with a group of underwriters. These are the folks who help sell these notes to investors. JP Morgan Securities, Barclays Capital, BofA Securities, Citigroup Global Markets, Deutsche Bank Securities, and Morgan Stanley are all part of this group. It is a collaboration to get this $300 million debt offering off the ground. The core of this report is this very large issuance of notes. They are issuing what is called 5.750% notes due 2031. That means by the year 2031, they promise to pay back all the money they borrowed. Plus, they'll be paying out interest at that 5.750% rate along the way. This type of borrowing is common for companies to finance growth acquisitions or simply to manage their existing debt. For Carlyle Secured Lending, this large sum suggests they have ambitious plans or significant financial needs they intend to address with this capital infusion. Now, when will this big money transaction actually happen? The report states that the deal is expected to close on the 7th of October 2025. Of course, this is all dependent on certain standard conditions being met. It is not a done deal until all the I's are dotted and T. S across, this gives us a clear timeline as to when the company will actually receive the funds from this offering. What does this underwriting agreement actually contain? Well, like most of these big financial deals, it is packed with details. It includes standard promises and guarantees called representations and warranties from Carlyle Secured Lending, their investment advisor, Carlyle Global Credit Investment Management, LLC, and their administrator, Carlyle Global Credit Administration LLC. These are essentially promises that everything they've told the underwriters is true and accurate. There are also covenants, which are agreements to do or not do certain things. This is all pretty normal for ensuring all parties understand their obligations and the risks involved. Here is a part that's crucial for risk management in these deals. The agreement also covers indemnification. That means if something goes wrong and someone gets sued or has to pay out money due to a problem related to this offering, there are provisions for how the costs will be shared. The company, the advisor, the administrator, and the underwriters themselves will have agreed on how to cover certain liabilities. This is to protect everyone involved and ensure that no single party is left holding the bag for unexpected issues. How did they get approved for such a large debt offering? This offering is being made under what's called a shelf registration statement. Think of a shelf registration like getting pre-approval to sell securities over a period of time. Carlyle Secured Lending already had this on file with the SEC, specifically a Form N-2, which is common for companies like this that are involved in investment management. The registration number 333 to 278,993 is the identifier for this filing. This means they had already gone through a significant portion of the regulatory hoops required to make a public offering of their securities. To announce this specific $300 million note offering, they had to provide further details. This was done through a preliminary prospectus supplement, a pricing term sheet, and then a final prospectus supplement. All of these important documents were dated the 30th of September 2025. These documents would lay out all the critical information an investor would need to know about these specific notes, including the terms, risks, and how the proceeds will be used. The actual document detailing this entire agreement is listed as Exhibit 1.1. It is the underwriting agreement signed on the 30th of September 2025. This is the master document that governs the relationship between Carlyle Secured Lending and the underwriters for this specific $300 million note offering. It is the legally binding contract that lays out all the terms and conditions we've touched upon, ensuring a structured and regulated process for borrowing this substantial amount of capital. So, let us break down what this all means for Carlyle Secured Lending Inc. On the surface, this is a clear sign that the company is looking to expand or refinance its operations through debt. Raising $300 million is a substantial move, indicating they either have significant investment opportunities on the horizon, potentially to grow their loan portfolio, or they're reusing this to replace existing debt with more favorable terms. The 5.750% interest rate is informative. It tells us about the perceived risk of lending to Carlyle secured lending at this moment. A lower rate generally means lenders see less risk, while a higher rate suggests more caution. This rate is competitive but not exceptionally low, placing them in a moderate risk category for lenders. The fact that they are using a shelf registration statement and then supplementing it shows a well-orchestrated financial strategy. They are not scrambling to get approval, they are proactively positioning themselves to access capital when needed. This also means they have likely passed rigorous SE scrutiny already. However, we need to consider the implications of taking on more debt. While it can fuel growth, it also increases leverage. More debt means higher interest payments, which take away from profits, and a greater financial burden if revenues falter. It is a balancing act. The company's ability to generate enough income to cover these new interest obligations and still make a profit will be key. We need to watch how they deploy this capital and their subsequent performance to determine if this was a wise financial maneuver. Are they investing in projects that will yield returns greater than the 5.750% interest cost? That's the million-dollar, or rather $300 million question. For investors, this offering presents an opportunity to lend money to Carlyle Secured Lending and earn a steady interest income. However, they should carefully assess the company's overall financial health and its ability to repay the debt. The involvement of major investment banks as underwriters suggests a certain level of confidence in the offering, but it is always prudent to do your own due diligence. In conclusion, Carlyle Secured Lending is making a significant play to bolster its financial position. This $300 million debt offering is a strategic move that could unlock future growth. The success of this endeavor will hinge on their operational execution and ability to effectively manage this increased financial commitment. Alright, that is our decode of Carlyle Secured Lending's latest move. What is your take on this big borrowing spree? Do you think it signals strength or potential risk? Drop your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more corporate financial deep dives. And don't forget to join our growing community on Discord, where we tackle these filings together. Link in the description. Thanks for watching, and we'll see you in the next one.